financial reports. So the most important financial report is balance sheet. Now, and what is the second one? Apart from balance sheet, what could be the second one? Any idea, Yogi? Yeah, go ahead.
Profit and loss account.
Profit and loss account. Very good. It is also called income statement because income is earned, is derived from profit. So if there is profit, then there is positive income, and if there is loss, the income is negative. So income statement or profit and loss statement, P&L statement, both are the same. And what is the third one, which tells about the way a company can, you all need that. So you all need cash. Same way firms also need cash, and that provides their liquidity and gives them survival advantage or saves them from bankruptcy and other things. So this is called cash flow statement. So there are three statements. One is balance sheet, the most important one or most detailed one. Then second is income statement, and third is cash flow statement. Now the purpose of, okay, what is the difference between income statement and balance sheet? Means what kind of variable it is? Means what is the difference between balance sheet and income statement, even though they are presented on the same day, end of the quarter, normally such as 31st March or 30th June. So what is the difference between them? So if somebody says that this is the income statement on 31st of March, what will it show? Will it show for that exact day, or will it show for the entire quarter?
Sir, one is for a point in time, the other is for a period of time.
Very good. So which one is for period of time?
Profit or loss is at point in time.
Profit and point in time. No. That is for the period of time, because the profit is earned over a period of 3 months. So if you have a money in your pocket, it is at the point of time that you are having money right now, but that is not your income or that is not your profit. So you may earn profit and spend it, and then whatever money is left, that is at a particular point. So that is called a stock variable, means it is at the present moment. So the stock variable is balance sheet at a particular time. What about income statement and profit and loss statement? It is always over a period of time. So period of time means what has happened over a period of time, how the company earned or how it lost over the entire quarter. So one is a flow variable. Flow means it flows like river or it flows like water pipe, and that flow variable is profit and loss or income. GDP is for a year, for a quarter. That is also a flow variable because GDP is income. Same way, the income of the firm is a flow variable, and balance sheet is the stock variable. What about cash flow statement? Well, here the name itself is flow. So it is a flow variable. So name itself is a flow, then cash flow statement is a flow variable. It tells over a period of time, means how the cash was earned and spent over the entire quarter. So that is what cash flow statement is. So who looks at these statements, and why I said balance sheet is the most important statement? Because what happens, that balance sheet, what information does it give? Yes, Rick, what information does balance sheet give, or what are the two sides of the balance sheet?
Assets and liabilities.
And assets is on the left side and liability, and what is the most important thing that we see?
Expenses. Expenses.
No, that is a part of profit and loss statement or income statement. Yogesh, any idea? So he said assets and liabilities. How do we know what is the value of the company?
Equity.
Net worth.
Equity, the stockholders' equity. And that exactly gives you the value of the company. So the total assets of the company is equal to liabilities. Liabilities means what the company has to pay to others. So whatever the company is liable to pay, that is liability. And stockholders' equity is what has been contributed by the investors or the founders of the company. So the company will will invest some money, and from that they will buy assets. Okay, so they can buy. Had it would have been very simple, that whatever the company contributed, that's what this asset should be. And the answer is yes. That should be the asset value if the company has not done any business. But when company does business, then it buys a lot of stuff on credit. The suppliers give them goods and they don't charge money immediately. So they say, okay, you can pay me after 1 month, after 2 months, or after 15 days, whatever it is. It depends upon the kind of good. Means if the good is bulky and very expensive, like plant, machinery, big machinery, or office furniture, etc., then they may give time to pay for a month or more than a month. And if it is like easily sellable, then they may give credit only for 15 days, like raw material. So they can produce and sell. So the raw material is also different. Like if machines are raw material, such as for cars, steel is the raw material, that may take longer time to sell. So depending upon the timing of production or cash cycle, the day the goods are sold, and the day means the goods are sold from home, from the supplier. Means the supplier sells good to the company, then the company will process it, and if the processing time is small, then they will say that, okay, you should return my money in 15 days or maybe 1 month. But if it is going to liabilities part, so whatever company has not paid, from that also it can buy goods. Yeah. And so that way the asset becomes liabilities plus stockholders' equity. So that is the equation of balance sheet. So balance sheet must balance. Means either the entire assets are borrowed from someone else or invested by the investors, purchased by the money of investors. So total assets is equal to liabilities for plus stockholders' equity. Okay, so this part is clear. Now, stockholders' equity tells us the value of the company. Now we say that the stock of this company, like Google, rose so much, Reliance Jio went up so much. So we see these stocks, and those stocks are one price of one stock. So for the entire company as a whole, whatever stocks have been issued, that will be multiplied by the market price of that day or today, and that will be the value of the company, or that will be a stockholders' equity. So balance sheet gives us the information about total assets on the one side, which conventionally we write on the left side, and on the right side we write liabilities and stockholders' equity. But what happens that dividing the paper into two parts becomes somewhat cumbersome or lengthy, or when there is a lot more information for big companies, then they write in the top assets and in the bottom liabilities, and then they write in the bottom further stockholders' equity. So liabilities can also be of two kinds. One is short-term liabilities or current liabilities, and that is defined as, you don't need to record, means right, because everything is recorded. You can always look back. So pay attention on its and answer the questions that I asked. So one will be the short-term liabilities. And what does short-term mean? How much time? Yeah,
Period of 1 year. I think.
period of 1 year. Very good. So if any, all liabilities that have to be returned within 1 year from the date they are given to the firm, these are called short-term liabilities. And long-term liabilities are which have to be returned after 1 year. So the company won't return anything during the first year. It may start paying maybe after 1 year, so such as if it is a bank loan, long-term bank loan, they may agree that, okay, we will pay first installment after 1 year, second installment after 1 year, and that way they can make it like that. Or maybe second installment after 1 year and a half, that way they can do. So long-term liabilities, which are not likely to be paid in 1 year, they are called long-term liabilities. So we have two kinds of liabilities, short-term and long-term. What about assets? Will they be also short-term or long-term, or will they be all short-term only or all long-term only? Yeah, who can answer? Saswat, do you have any idea? If liabilities are of two kinds, short-term and long-term, will assets be of two kinds or will they be of only one kind? What do you think?
I have no idea, but I think it will be of both short and long term.
Yes, it will be. They will also be of short and long term. Now, which are short-term assets? The cash that you have, the inventories that you have means raw material. Inventory like raw material, that is also short-term current assets. And then when you sell, you also sell on credit. So they are called accounts receivable. So all short-term receivables, they are short-term, means they have to be received within 1 year. So cash is always a short-term asset because you can spend it easily. Then all the accounts receivable, the sales that you have already made but haven't got the money back, so they are also short-term assets. And then your raw material is short-term asset because you consume it daily. Now, what can be long-term asset?
Real estate, like
Hmm?
if we take an office space or something like that, like
Office space is purchased it. So that is called the land and building. Then second long-term asset, what can be? All the machines that we buy means plant, property, and equipment, PPE. It is in short, it is called PPE, plant, property, and equipment, and they are invested for long term. Once the building has been built, office space has been built, it will last for 20 years or 30 years. Machinery will also last for more than 1 year, maybe 5 years, 10 years until it needs to be replaced. And then we have this land that we purchase or the companies purchase, that is also forever. So these are long-term assets. So that way we have, and these are very important because what happens that whenever company is bankrupt, its long-term assets are of little use. The bank only looks at, well, you didn't pay my mortgage on time, I will seize your property. So that's why the current assets are more important for the survival of the company. The long-term assets are kind of dead investment, or you can say fixed investment. They're not dead investment, but more fixed investment. But short-term assets are very important because they talk about survival. They give indication about survival of the company. So if a company has a lot of land, big buildings, and a lot of machines, but if it is not having enough cash to pay mortgage, it will go bankrupt. And then the bank will take away the entire property. So that way, short-term survival of the company is also important. So we talked about balance sheet. So assets are also of two
so
kinds.
survival of the company depends on the short-term assets, is it? Like survival of the company depends on the
Depends on the short-term asset, yes. That's why we look at current ratio. And current ratio current assets divided by current liabilities. So that is what current ratio is, but we will discuss in more detail about it later on.
What about human assets? Like, do they come under long term or like employees and all? Do we consider them assets or?
No, employees are not considered assets, but they are considered, yes, rather they are liabilities because they need to be paid. But yes, management who can work without salary, then they can be, but they are not part of assets. That is human capital. So they are not part of assets. Assets are only physical goods and cash.
Sir,
Okay,
if the company has made other investments like fixed deposits or
That is asset, yes.
shares and
Yeah,
other
now that is whether it is short term and long term. If the investment is for more than 1 year,
yes.
that becomes long term asset. And if it is short term, then it is less than 1 year, then it is short term asset. Yes. So investments are short term. Okay. Now we must so that is the concept of balance sheet. Now who looks at the balance sheet? So one is you when you want to invest. Yeah. So you said investors. Okay. Then who are the other people?
Auditors.
Auditors audit the financial statements, but they may not look necessarily. They check the accuracy of the financial statement, but auditors examine whether these statements have been made correctly or not. So they are not actually who look at it. They just examine the accuracy. So who are the other people? Investors are definitely the number one. Then
Competitors.
competitors will look at it, yes. They are interested in seeing whether they are doing, how they are doing relatively. So competitors will look definitely. So that is the second group of people. Then who else? Bankers who give the loans. Then government, because the government wants to collect taxes. So they look at the financial statements, that whether the company is doing good or not. And then employees also look at it, because employees either buy stocks, the employee stocks options, or the union leader wants to see if the company is making a good profit or not. Yeah. So if the company is making good profit, he will bargain for higher wages. So employees and the union leader also look at it. And then there are other public interest groups like environmentalists. Means they will say that, well, if the company is having good money, they may say that, oh, this company is causing too much environmental pollution. Let's have some money from them, and they will look at these things. And the most important, who look at the daily on the daily basis, are the management themselves. Means the management examines how they are doing on day-to-day basis. So they also look at the financial statements. At least they look at the profit and loss statement every day, whether they are making any profit or not from their transactions. So these are the about 7 categories. Means investors, bankers, employees, government, environmentalists, and other public interest groups, and then managers themselves. And which was the 7th one? Anyway, it has already been recorded, so we can go ahead. So now we go for income statement. And as we said, that income statement is over a period of time, for the entire quarter, and that arises from sales of goods and services and the cost of raw material. So whatever is sold, that is sales revenue. So that is not net income, but that is sales income or sales revenue. And that sales revenue is met by certain costs. As you said, that employees are paid wages. So that is the labor cost. Then we have raw material cost is the most important cost of finished goods. So that is the another thing. And then we have other administration costs. Then we have to pay interest, depreciation on machinery, and then this taxes as well. So when all these are deducted, we get income statements. I will explain all these in detail with an example. So I will make balance sheet before you. I will also make income statement, and I will also make cash flow statement before you. And I will be asking questions from you, and then I will enter. So we will do it in a spreadsheet. So cash flow statement is important because it tells the liquidity of the company. The company must have enough cash to pay its fixed costs and variable costs. So what are the variable costs? The cost of raw material, the wages of employees, means which vary. Fixed cost is if it has taken a long-term loan while building the plant and machinery, the bank will ask for its mortgage. So all the mortgages, they are fixed costs. Means the bank must pay that. Whether it earns revenue or no, it must pay. So that's why it is called fixed cost, and the amount is also fixed. Variable cost means that varies as per the operations. Okay. So these are the three statements. Now, the cash flow is also of three kinds. It comes from three sources. One is the sales. So sales part will be from operations. So we get cash flow from operations. Then the another is shareholders provide. So that is investing part, or the company takes long-term loans from the banks. That is also investing part, because it is more than 1 year, so it is basically investment. The loan was taken from bank and invested into plant, property, and equipment, or PPE. Okay. And then we have this. So we have investing and financing. Sorry, financing was this what stockholders provide. So that is called financing, and what this bankers loans, that is also financing, because it is financing. The cash is come from financing, and investing is investing in property, plant, and equipment. So these are the three. And you also said, Yogesh, that one is that the company buys the stocks of other company. So that is also investing. That cash flow is part of not operations, but of investment. So three sources of cash flow, three kinds. One is from operations, means running day-to-day company, producing goods, selling goods, and the cash earned. Then another is investing, and investing is investing in plant, property, and equipment. Then Yogesh said that investing in other companies, and then mergers and acquisitions. That is also part of investing cash flow. And the financing is loans and equities. Okay, or mainly long-term loans is financing. Short-term loans are also financing, but then they become part of current cash flow too. Anyway, so we will discuss all these things with an example, and the same example that Rick had sent. So let's discuss this before, and I will make the statement before you, so that you understand and you will answer it. So let's see. This is the Excel spreadsheet, and I will do the transactions. So let me see this. Where is that material that Rick had sent? This one is a spreadsheet, and the question. The question is.
So the screen is not yet shared.
Oh, the screen is not shared? Okay, I will have to share the screen as well then. Okay, just a minute. Okay, so, okay. Share the screen. Turn off camera, turn on, and then this one is send a reaction. Present now. What is sharing the screen? Sharing?
Present now is the screen share. Present
Which
now
one?
is the present
Oh.
now. Present
Which one?
now.
Oh, okay. Send it now. Present now. Okay. Okay. Chrome tab, Windows, entire screen. Okay. And then entire screen, then I click this and then share. Yes, that I had learned it that day. Little bit. Okay, so you all can see the screen.
Yes.
Don't show this informative mirror. To have anything, don't share your entire screen or Windows at this. Don't show this again. Okay. Is it okay or is it bad? Hmm. Can you see
I
this
think you
thing?
can go to the Excel tab. Like,
Hmm?
I think you can go to the Excel tab where you go.
Excel tab. Okay.
Yeah.
So I am coming here on Excel tab. And can you see this clearly?
Yeah, it's visible. It's visible.
Okay. Now I go to the question part. That, let me see, where is that question part? Not this one. Probably here. Not this one. Let me see. Yes, an introduction to find. Okay, let me open this. Okay, yeah. So this one was here it is. So this one I had already usage of financial account. Yes. So I don't need to have this. This part is the question part, and I will read the question. So and then work with you. Okay. So the question is yes. Here it is. The first question is that Debbie, Sarah, and Jane are three close friends who love the outdoors. They are avid skiers and have an entrepreneurial spirit. They decide to create a small company to import and sell high-end Swiss skis. They call the company DSJ. Entrepreneurs contribute 10,000 euro. They incorporate DSJ on June 30th of year one. So first thing is that on June 30th, the three entrepreneurs are contributing 10,000 each. So we will write it here in Excel spreadsheet, the first part. And that part starts here. Let me write the balance sheet on June 30th. Because nothing has happened, it is the starting date. So balance sheet on June 30th. Now, as I had said that there should be assets and in the T account, so left side we write assets and on the right side we write liabilities. Okay, liabilities. Now, and then we write also a stockholders equity. Stockholders equity means a stock. Let me write only equity. Yeah, equity. So equity value or stockholders equity, they write it. That is the better word. So I wrote equity. Okay. Now, the first thing is that they have contributed, three of the partners have contributed 10,000 euro each. So, or $10,000, whatever. So, what is this? This is cash. So, on the asset sides, we have cash. Okay. They're contributed. And how much is this? This is 30,000. Because three of them are there. Let me have this.
Sir, should we not mention that as short-term asset and long-term asset?
Okay, we will mention that if it comes. Right now, these are only, that is the only asset. If it comes, then we will mention that. Let's see, but it is only short-term asset. It is on June 30th. It is just starting. So we will mention that as current assets. If you want to mention, I can do it right now. But it is, there are going to be only 2-3 entries.
Okay.
In the next part, I will make it short-term, long-term. Okay. So this is the cash, and then 30,000 is the money that they got it. Now we have written on the left side and asset is 30,000. So what will be on the right side? So that the balance sheet always balances. So the balance sheet must always balance, and this one is 30,000 positive. So I will have to write it equity value, and this one is also 30,000 positive. So we will have this liabilities plus stockholders, and here it will be total, and then we will make the balance sheet. Okay. So this we wrote cash, and this the equity. Now it is clear, not very difficult. Now we go to the next part. Sorry, not this part. It was no, there was that. This part. So if I open it, then it comes here. So how can I okay? So this part is there now. Then it says, and each owner received 2,000 shares with a nominal value of $5. So this we need not write, but we can write it here. If you want to say, then you can say like this, number of shares. Though it is on the different line, but for finding it is more in the balance, it is there, but in balance it is the total. So no need to write number of shares here. Let's write only equity value, total equity. Though we can write somewhere in the note that okay. In the note I will write number of shares, and that is how much? 6,000. 6,000, because each one is given 2,000, so this one is 6,000. And then we can calculate value of share and divide it by 6,000. That we will do. So equity is 30,000. Now let's go next part. What was that? How does that hide? Probably it is this one. No. Yeah, this one. Okay. Now I am able to figure out. So it says, now what says? On the same day, DSJ borrows 9,000. Okay, 9,000 from a local bank, and then what does it do? At an annual interest rate of 4%. The loan and the interest rate are to be paid in full on December 31st of the year one. So this is going to be a short-term loan because it is going to be paid within 6 months. So loan is 9,000. So again, on the liability side, we will have to write here loan, bank loan. Okay. Now bank loan. And this one is 9,000. So I write here. Now there must be something on the asset side that where this 9,000 has been spent, or if it is cash, then we will add some more, or otherwise we will leave it 9,000. Let's see how much what is the next part. Oh, what is this one? No, not this. Sorry, I am making the same mistake. It is here, this one. No. So what is the 9,000 done? All the money is deposited in DSJ checking account. So this 39,000 has been deposited. But on June 30th, DSJ rents a warehouse and pays 5,400 for 6 months rent in advance. So this is rent in advance. So this becomes prepaid rent. So prepaid rent is 5,400. So we will write here on the asset side because it has been prepaid and we are going to use it. So prepaid rent. And this one is 5,400. 5,400. Sorry. Okay. So what is the cash left? Now the cash, the remaining is the cash. So this one is equal to 30,000 plus 9,000 and minus 5,400, and we did it. So we get 33,600 as cash. So this is our balance sheet, and here it total becomes simply sum it. So equal to, and we get 39 equal to this and plus this, and we get this 39,000. This side also 39,000. Oh, sorry, not here, but here. Control X and Control V. So this is our balance sheet. On June 30th.
The cash part again, the addition that you did, like.
Okay. So what is your question? Let me delete it. Sorry, delete all. Okay. Yeah. What was your question?
So how did you come to the C4 calculation? Like
Cash
what
flow calculation.
Yeah.
Because 30,000 is the equity, this part. So I wrote it here. Then bank loan is 9,000. So I added that as cash because this bank loan is cash. So it is added as cash in the checking account. And then from this money, they paid rent, prepaid rent for 6 months. That is 5,400. So that cash has been deducted and given to the rent part. So it is a rent expense.
Right.
Okay. Is it clear or not?
Yes, I got it.
Okay. Is it clear to you, Shashwat? No, Shashwat,
Yes,
are you
sir.
on? Okay, very good.
Yes.
Okay. So, but this one is the simple part. So this is our balance sheet on bank, and now what we write is we just put these together. So this is the balance sheet of the bank on June 30th. And this part was the easiest part, not at all difficult. The next part becomes more difficult because we are only beginning it. So this is the beginning part, and we started from here. Now next part will be more difficult and most interesting too. That will be interesting also. So we will have this period, transactions during quarter. Yeah, so next quarter. During or transactions during, well, it will be better transactions from June 30th to September 30th. So we are going to write transactions. So this part I will write how much is the cash. So cash, okay. So cash part is here, okay. And we have 33,600, 33,600. And then we have prepaid rent as well. So prepaid rent. And this one is 5,400. So, okay. And then on the liability side also we have this. So equity and bank loan. This part is actually, I will write here equity. Okay. So equity is 30,000. Why I wrote it down? Because equity is in the bottom. It is written in the bottom when the all liabilities end. And here bank loan. But bank loan, but it is in the part of cash. Since we are not making the statement yet, so this equity should be actually, I have written it here. And let me have this bank loan too down. Okay, not here, a bit more space because there will be something more. So Control X and I put maybe here. And bank loan is here. This one is for 9,000. Okay. So far we have just copied. Now the real skill comes here. From here it will be the interesting part. Okay. Now we go down and the questions are asked. Okay. So bank loan and this we did the same thing. And normally the balance sheet is not made like this. It is the assets part on the top and liabilities and owner's equity part are written on the bottom. That is the convention, so that everything can be written in detail in the law. Okay, so let's see, here is the first thing. So we come here and it tells in early July, DSJ pays 4,000 in cash for equipment. Okay. Now, what is this equipment? Equipment is an asset or liability?
Asset.
It is an asset. Very good. Because the equipment will be used for production. So perfectly correct. So the change will happen on the asset side only. So it pays. Here is the asset side. No, we are having. I haven't written asset. Let me include it. Insert. Where is the insert row? And let me write this side assets. Okay. Since I am building it okay, let me remove this from here and put it here below, because I will put here liabilities and stockholders equity. Okay. So Control V. I'm putting it there. I'm making it up and down. Now cash and prepaid rent. So we have got this equipment. Okay. Equipment for 4,000. And since it is in period 1, so this one is the one, the first transactions, I am writing it number 1. and equipment has been paid for 4,000. So this one is plus, not minus, because the value of equipment is 4,000. Is it clear to you both also? Means,
So no, can you explain this one part once? Like,
yes. Let me explain it again. So this part is that equipment has been purchased for 4,000, and you said, Yogesh, that it is an asset. So I wrote on the asset part, and its value is 4,000. So I wrote it 4,000. Okay.
yeah, so why one though? Like, what does one mean here?
Oh, this one is period first transaction. I wrote. You can write it. You don't have to name it. This one is here. I wrote one. This because this is question one, not this one.
Okay. Oh, got it. Okay, in that sense. Got
So
it.
in order to say this, that in early July, DSG paid 4,000 in cash for equipment. So paid cash means cash has been deducted. Now this cash will be in the minus part because cash has come down and that happens in the one. So this becomes minus 4,000. Okay. And this one is the value of the now both these balanced. So when it is in the asset side only transaction, then the cash has become minus because it was paid to purchase the equipment and equipment became positive. The balance sheet has liabilities have not changed at all. So we leave the liabilities like that. Okay. Here I will name it liabilities.
Sir, but it should be a point in time now, sir. But we are
Yeah, it is
using this
point
for a
in time,
period.
yes.
But it is between June 30 to September 30th, right?
Yes, from July 1st. It is from July 1st to September 30th.
So it
So,
cannot be called balance sheet now, sir.
no, we are having, I'm right, it is not balance sheet. Balance sheet will be on the end, on the
Oh,
30th.
Okay.
So we are building the balance sheet. These are the transactions, means they will be part of cash flow statement, and this one will be part of investing. So income statement too, but let's see. So, but this one definitely be part of cash flow statement, which is flow variable. So first transaction is this, and both are on the asset side. So one is minus, and the other is plus, and both cancel. Rick, is it clear to you?
Yes.
Okay, and Swastik, is it clear to you?
Yes, sir. Yes, sir.
Okay. Now the interesting part we will go for two. Oh, sorry, what? We will go for second part. So it was only this. The purchase of equipment creates an okay. Now we go for the second part. So that's how you see the book has also answered, means cash minus 4,000 and equipment plus 4,000. Nothing happened in liabilities. Now I will go to next question and ask from you all, and then we will see. The company purchases merchandise inventory, means ski is worth 28,000 on credit. So here, what is this? Swastik. What's your name? Saswat. Sorry, Saswat. Saswat. This 28,000 is an asset or liability because the company purchases merchandise inventory worth 28,000.
So it will be an asset, no? It will be
It will
used
be an asset.
inventory.
Very good. So inventory is an asset. So I write it here in the asset side. So I write it here as inventory. Yeah. Ski inventory or simply inventory I can write. And this one is in period 2. So I write here 2. And this one is 28,000. This is asset side. Okay. And cash has not been paid. This is the interesting part. Means we cannot deduct cash here because cash has not been paid. What does it say? Oh, sorry. I am doing the same mistake again and again. Let me. So what has happened? Worth one day on credit. On credit means loan. Means the cash has not been. Now, this credit is what? Is it an asset or liability? Ready? You answer.
It's liability because you'll have to pay at some point.
You have to pay at some point. So this is the credit is a liability. It has not been paid cash, but it is a liability. So we will write it, go here and come in the liability part. So this liability is what? Liability means this becomes accounts payable. And payable for what? Accounts payable, payable and payable for equipment, okay? So should I write equipment or account for? I can write either equipment means because it is inventory, so accounts payable. And it is in period 2. So this one is plus or minus. Yogesh, it should be plus or minus.
So it should be minus.
It should be minus. Okay, Rick, it should be plus or minus.
Minus.
And Shashwat,
So accounts, so the liability will increase, no? 28,000 will increase in liabilities.
very good. So it will be plus. Because it has been, yeah. Now let me explain here so that you all of you learn, so that Yogesh and Rick don't make mistake. First of all, use the common sense that this side is 28,000 plus. So either 28,000 minus happens here in the asset, then the balance will balance. Then the balance sheet will balance. But if asset side has increased by 28,000 and we are writing the counterpart on liability side, that must also increase by the same amount. Then only it will balance. So this is called double entry. Yeah. What will happen, Yogesh, if you write minus 28,000, then your liabilities will become smaller. They will become only 39 minus 28 means 17,000. And your assets will be how much? 39 plus 28, 67,000. So the balance on the asset side will become 67,000. And if this is minus, it will become 17,000. 11,000 only, because 39 minus 28 is 11. So there will be a
What is
difference.
that term called, sir? That you said something double. Like what is that term?
Double accounting or double recording, double entry. Means whatever has been entered on the one side, there must be another entry of equal amount and somewhere on the other side. Either if it is the equal amount is in the same class, same asset, then one will be plus and minus. If it is in different, means one side is asset and another is liability, so then both must be of the same side. Then only it will balance. So that is for if you don't know the intuition. But Shashwat gave the intuition that liability has increased because we have to pay. So the intuition is that if liability has increased, then means for liability it must be positive. So if I make balance sheet, then what will be the balance sheet this side? I just equal to add this plus this plus this, because everything will be as plus this and plus this. Okay. So this part 67,000. I add here as well. So equal to this plus this and plus this. So 67,000 and 67,000. Assets is equal to liabilities plus equity or plus stockholders equity or stock equity. Equity, there is no need to write stockholders equity, but some people may write. So the balance sheet has matched. Now, is it clear?
Yes.
Then I will move ahead, otherwise no.
Yeah.
Clear? Okay.
Yes,
so,
sir.
Okay. Delete. And this one also delete. So we go for next part. Next part is, so this one was 2. Now 3 will come. So on 3, we come here. So let's see if how the book has done. The book did the same thing. Merchandise inventory 28,000 and accounts payable 28,000. I wrote the same thing because this account has to be payable. It has not been paid now, but it is payable. So that's how we do. Now we go for 3. What does 3 read? And I will ask from you people first and then maybe from Yogesh first. So DSJ sells skis costing 21,000 for 32,000. Okay, so here are 2 things. Sells skis costing 21,000. So what is this? Skis were the same, this 28,000. Yeah, this was the merchandise inventory was skis of 28,000. Out of this, 21,000 has been sold. Yeah. So what will happen? This one will reduce asset by 21,000 or increase asset.
It will reduce, sir.
Reduce because it has been sold. Okay. So we will write it, skis has been sold. So in 3, we will write minus 21,000. Okay. We wrote here minus 21,000. But it has been sold for 32,000. Okay. So what does this mean? So somewhere this 11,000 difference is there. Okay. It has been sold for 32,000. So we will see how the 32,000 has been earned. So it says all sales are on account except for 3,000 which are for cash. Means 3,000 has been received and another are on credit, means on account. Means they have not been cash only. Out of 32,000, 29,000 has not been received, but only 3,000 cash has been received and rest is on credit. Account means on account means credit. So this 3,000 cash, where will it go? First of all, is this asset or liability? The 3,000 cash is always asset, so nothing to think about it. I will write here, since it has 2 parts, this one is 21,000 and 32, so there is difference. So let's make it 3A. And then here I will write 3B, which is cash part. So 3B, if I write, what is the problem? Let me put all in center so that I have easy. Okay, 3A. So cash is here 3,000. So here 3,000 cash is the positive part. I wrote here. That's fine. This is the cash flow. So now 21,000 is accounts what? Is that asset or liability? We sold for 32,000. So we received 3,000 cash and 29,000 are yet to be receivable. So that 21,000, what will that be? Will that be accounts receivable? Because we are going to receive it. So is that asset or liability? Rick?
Assets only, but depends long term or short term. Like
No,
not
it is
sure when.
short term. It is short term, no, because it has to be done within this quarter. It doesn't tell long term. So
Then
all
asset.
sales, means this is asset short term, not long term. So it is asset. So I will write here asset accounts receivable. So new asset is here it is accounts receivable. Okay. Accounts receivable. This one is asset, no? So accounts receivable. And this one is 29,000. Okay. I wrote here. But what did we do? Some 11,000 is still left. So we go for here and we come here for profit and loss account. So we write profit. And what was our sales revenue and the profit and loss account? So we have this sales revenue. So I will write here 32,000 was sales revenue. So in the profit, I will write here sales revenue, and that one is 32,000. So I will write here 32,000. Okay. And then this 32,000 was sales revenue. We got the money. But then for this, we paid cost of goods sold. So it is not that it has come from heaven. So we will have to write here cost of goods sold. So cost of goods, COGS sold. And this one was 21,000. So I will write here minus 21,000. Because that was the cost. Okay. So that way we have this again balancing. This 32,000 came here and this minus 21,000 came here. Yeah. So our account will remain balanced. That's how. Is it clear?
So can you explain the last part once more? Like why did
The
we
last
get
part
21,000?
means, okay. So it has come from operation.
3A
Yeah.
part and 3B part. Like
Which part?
the 3A versus 3B. Like
This one, minus 21,000 and this minus 21,000.
yeah, yeah.
Yeah, this one is the cost of goods sold. So that's why I wrote a count double entry of this and this. So this was the inventory part. The ski inventory has gone, and that ski inventory was sold here. That is the cost of goods sold. That's why we got this 32,000. So you have to write this, that how this revenue was generated. This entire 32,000 was not generated from heaven, but it had some cost of goods sold. So that's why we had to write this part on the stockholders part. Means it is not equity, but it is profit and loss. So profit is now 11,000. 32,000 minus 21,000 is the profit. So that is the 11,000 of profit that we generate. So
So
this
why is the cost of goods sold coming under 3B? Like why is the cost of goods sold coming under 3B?
under what? Under 3B.
Yeah.
Oh, because I already, well, you can put it in 3A as well. It is just, okay, you can put it like this. Here, since I had written sales revenue first, so you can put it like this as well. And then you will have to control X and write here. You can do like this as well. It is not that it has to be, there is a hard and fast rule. You can change that as well. It is this AB is just for convenience, mainly. Okay. So if it is clear, means this sales revenue has some, this will be part of income statement. When I will make the profit and loss statement, then this will give us the gross profit of 11,000. Yeah, so this will be the part of income statement. So we will make income statement from here and cash flow statement from here, only this part. So this part, which is of cash, that will give us cash flow statement, and this part, which is below the profit, so that will help us make income. All entries below this will help us make income statement like this. This means all these three will be, they will be part of income statement. So that's why we are writing over a period of time, because we are writing here transactions from June 30th to September 30th. So I am making it bold and maybe underlined as well, so that it tells us separately. So Shashwat, is it clear to you? Should I move ahead?
Yes, sir.
Okay.
Yeah.
Okay, now let's move ahead. So three part is A, B, it was because there was a profit. This 21,000 was not equal to 32,000. And then this 3,000, this 32,000 was divided into 3,000 cash and 29,000 accounts receivable. So that's why I had to do A, B. Otherwise, I can do it in one column as well. It is just for explaining, I wrote it. So let's see how the book answers. The book says, yes, 21,000. Yeah, in 3A it wrote that I had written it opposite way. And same way here, sales and cost of goods sold minus 21,000. It wrote here, I wrote it here. That's it. But it is it doesn't change the values. Now we go to the next question. The
Sir, can
company,
we take one of the questions from the document which I had sent, the assignment which.
Hmm?
Can we take the questions from the document that I had sent? The other one, which.
The other one, yeah, we will take that too, but let's do this. Unless you understand this, that
Yeah.
will not be correct.
Okay.
Yeah, so you have to understand, because this for Saswat and Yogesh, these are new things. So unless they understand, then they will answer the question. It is not that I will answer.
Sure.
First I will give them the opportunity to answer. So we have this next 4 part. The company received 1,500 from a customer as a deposit for an order to be delivered in October. Not now, it is only July, and it is already October. He has received the 1,500. Now this 1,500 is cash, yeah, because it is received 1,500 for an order to be delivered in October. So this cash is asset, nothing to ask. Now, what kind of liabilities created then? So I write cash means in 4, 1,500 is cash, yeah, because the company received. So this one was simple. Now, where to write this 1,500? Somewhere, okay. Now it is to be delivered in October after 3 months, not even September. It is the company's account will close in September. On 30th September, the balance sheet will be prepared, and the goods are yet to be delivered in October. So this is more interesting situation. Now it is to be delivered, so that will be the liability part, because the company has to deliver, and we will name that as prepaid goods. So prepaid goods, and because that is to be payable, and so I write here as 1,500, because this side I have written positive, so on the liability side also this should be positive. Had it been in asset part, then this should have been minus, but on the liability side it is there. So one is that in order to make the balance sheet balance, and the intuition is that liability has increased. That is what Saswat had explained, that the company has to deliver, means liability has increased. So that's why it is positive. Okay.
Sir, but since you're preparing this on September 30th, there is no guarantee that they would deliver it by October now, sir. So
Yes, sir. So, but liability is today, no, because it received 1,500 cash, and that's why I read prepaid goods, and it is part of accounts payable. Or prepaid goods, it has to be delivered.
okay, okay.
Yeah, so you can write it if that's why I wrote prepaid. You can write it goods deliverable as well. If you don't want to write prepaid, you can write goods deliverable. You can write this as well, and that has 1,500. So this is liability, because the liability has increased. Okay. So next one you will explain. So the company 1,500 DS equipment. Now it says that, is this revenue or not? Now, is this revenue or not? Because I didn't write here. Is it still sales or not? I didn't write on the, I made it a liable. Why? In this case, I wrote 32,000 as a revenue. But here, I didn't write revenue. Why?
The transaction is not complete yet. Like.
Yes, transaction is not yet complete. Here it was already sold. Transaction was complete. So, if the transaction is complete, then you recognize it as revenue even though you have not received the cash. Here, it is just the opposite. You received the cash, but the transaction is not complete, so it becomes a liability. So that's why goods deliverable becomes liability part. Uh, Rick, did you learn this or you knew it from before?
No, like logically, I just said like
Logically, you just learned, yes.
even if
So,
I learned it in class, it went over my head. So not
okay,
entirely.
yes. So it is not revenue because the transaction is not complete. When the good will be delivered in October, then this 1500 will become revenue. So what we will do that day, though it is not part of this book, but what we will do that day, that we will here write minus 1500 because the good has been delivered in October, and on this side sales revenue is another 1500. So since why I wrote plus here 1500, the intuition says that since it is part of the liability, means of one kind only, so one will be minus, then other must be plus for balancing. That is the simple mathematics, and those accountants who don't know, or those students who just try to pass the exam and not understand the logic, they do that. That since it is on the both sides, both are on the same side, so one will be minus and other will be plus, and which one will be minus and which one will be plus. They make mistake in that, but still. So on 15th October, when the goods will be delivered, we will write sales revenue 1500 and goods deliverable has been delivered, so we will reduce it minus. Means this reduces the liability because the good has been delivered. And then the cash becomes the revenue. But this is not part of that, this period. So I delete both because
So,
this is going to happen after
why,
30th September. Yeah.
why did we have that minus 1500 and plus 1500? The one you deleted, like what was the
Oh,
logic?
okay. The logic is that when this one is the liability now, this 1500 is now liability.
Yeah.
Because the good has to be delivered in October. Okay.
Right.
When it was delivered, actually on October, if it is delivered, then it is no longer the liability.
Okay. Okay.
The
Got
liability goes down.
Got it. Got it.
Yeah. So control one. Okay, very good. So keep asking questions like this. Then all will be clear. It is not that if you are not clear, maybe somebody else is also not clear. Or if they are clear, then it will be a repetition for them or confirmation of their knowledge. Okay. So goods deliverable became here this part. Now 4 is over. Then the book has not solved this here, it has solved in the book. Now 5. So 5 is the company collects 11,500 from credit customers. This 11,500 is what? Is it asset or liability? Because the company collected from credit customers.
Assets, sir.
Asset.
Asset, because it is cash. So first thing we write here cash, 11,500. So this cash is 5 is plus 11,500.
Should that not be from accounts receivable, sir?
Yes, it will be from accounts receivable. Means here accounts receivable. Okay, Shashwat.
It will be
Yogesh
minus
said,
11.
huh?
It will get deducted from accounts receivable. The cash
Account
which
has
has
been
been
deducted. So what will be the sign here?
minus
Plus or
11,000.
minus?
Minus 11,500.
Minus 11,500. Very good. So this 11,000 minus has gone, the asset has gone down. We are going to receive now only how much? 17,500. And we already received cash. So one is positive, cash has increased, and accounts receivable has decreased, negative. So our balance sheet will balance.
So why did the accounts receivable decrease? Like I'm not able to.
Why it decreased? Because we were to receive 29,000 and we received 11,500, means it has become less. Now we have to receive only 17,500 is left. No?
Okay. Okay. Okay.
Means I am to receive some money from you and from Rick. And if you paid, then of course I am going to receive less. Only I could receive only from Rick. So some of the customers paid, and then it became lower. So accounts receivable became lower. Is it clear or no?
Yeah. So we
Yeah.
we owed from customer and they have now paid. Like the
Yes.
what is
So
their
your customers owed you.
Yeah.
So that's why it was your asset, because you were to receive from them. Now they paid you. So you will not receive from them. So your asset has gone down. That asset has gone down. Account receivable has gone down, but cash has increased.
Right.
So no problem with balance sheet, because one is plus and minus. This balance sheet asset is equal to liability plus stockholders equity. That will remain. No issues.
Right.
We go to the next part. So 6. Now, okay. We go to the next part. So that's how we did. DSJ pays 26,000 to the suppliers of merchandise inventory. Now, what kind of entry will be there? Rick, your turn. Oh, okay. Yogesh, you can say. What kind of entries will be there?
Accounts payables, liabilities.
Account payables will decrease or increase?
That will increase, sir.
Accounts payable will increase.
Yes.
I think it will decrease
will-
because
It
now
will decrease because DSJ pays.
Yeah, it will decrease because he pays it. So here is the accounts payable on the liability side. This accounts payable was 28,000. Now out of this, so this one is 6%. So I 28,000. So this one will decrease because he has paid. So it will be minus. Yeah, minus 26,000. Because it has decreased, that is the intuition. Yogesh, clear?
Sir, I'm not clear, sir.
You are not clear. Okay. Here it writes, here it says that it had not paid 28,000, and that was part of what? This when was the part? 28,000. It had borrowed, means it was accounts payable. 28,000 was in.
Okay, sir. So
part
they were
six.
supposed to pay 28,000. Out of that, they have paid 26,000.
Yes.
So it is minus. Okay, sir.
So
Yeah.
now accounts payable is smaller.
Yes, sir.
Okay. And how did they pay this 26,000?
Using the cash.
Using the cash. So what will happen on the cash side? It will decrease or increase?
Minus or decrease.
The cash balance will decrease or increase?
decrease.
Decrease.
Decrease, because they paid, so cash has become smaller. So I will write minus 26,000. So we again match it, because accounts payable is minus on the liability side. So if something is on the asset side, it must be minus. And that minus is 26,000. So our balance sheet will balance. Okay. Should I move next?
Yes, sir.
Okay. So 7. 7 is on July 1st, DSJ hires an employee. His monthly salary is 1,200 and is paid in cash at the end of each month. Means July 31st, August 31st, and September 30th. So total 3,600 is paid. And it is paid from cash balance. So what will happen to cash?
Sir, accounts payable will increase, cash will decrease.
Cash will decrease. Okay, that's correct. So let's see. So here cash will decrease. Let me write that. So in the cash, I write 7, and it is minus 3,600. Now, why are you saying accounts payable? Where did the accounts payable come from?
Or we will have a new column called salaries, sir.
Yeah, we will have a new column, and what will that column be?
Salaries.
Wages. Yeah. So here it was cost of goods sold in inventory, and then we have this side wages. And wages will be now 3,600. Yeah. So why will it be now? This 3600 will be positive or negative? Yogesh.
Sir, if it has to balance, it has to be negative, sir.
It has to be negative because it has to balance. Now, what is the intuition behind it? Shashwat. What is the intuition behind
Wait,
it? Huh?
wages have to be given. Wages have to be given. So it
Yeah.
will.
So why will they not be positive? Why are they negative?
It will.
Because it is part of profit, so profit goes down.
Oh,
Okay, so wages are cost, kind of cost, a part of profit, because they are under the heading of, I have not written anything in the profit column. All these are parts of profit. So profit access is the big classification. Now out of this, sales revenue is positive because it increases profit. This decreases profit, so this is minus 3600. So you guess you did intuition, so it must be minus. And then I explain the logic that the profit has gone down. Okay. Now we go to the next part. 8. Okay. Other operating expenses, utilities. So here it is, other operating expenses amount to 2,710 and are paid in full in the period. So what is happening here? Who will tell? Rick, your turn. So which item is getting more and which item is getting less? Or if both items are getting more and both items are getting less?
So I think this is an operating expense, right? So it's a liability, right? Like
Liability, no, not liability, not a liability, because you don't have to pay, it has already been paid. So this is not a liability. The amount has been paid now. Yeah, it says no, it's paid in full, in period. Means it has been paid now full. So it is no longer a liability. It has already been paid.
something like accounts payable, like
No,
will
it
decrease.
is not accounts payable because it has been paid in full. Had it been not paid, then it becomes account payable. But it has been paid. Okay, Shashwat, what is your explanation?
it will generate a new category of operating expenses.
Very good. New category of operating expenses and it has been paid. So where will that operating expenses go? Which part? So I come here and where will I write operating expenses? As a part of liabilities, as a part of profit, or as a part of assets? Where will I write?
Profit, right?
Profit, very good. Because utilities has been paid, so it is a part of profit has gone down. So what I would say, other expenses, or I can write simply utilities, or I can also write other expenses. That also I can write whatever you want. Name, it has to be just understood, okay? Means, okay, other expense I write, so the OE is not correct. Other expense. So I write here 2710 and this one is part 8. So now, is it plus or minus?
Minus.
Minus.
Minus. And what is the intuition behind it? That profit has gone down.
Yes.
Okay. Now, where will be the second entry of this? Means its counterpart,
Cash.
cash. And obviously it will be minus because this is minus and so it must be minus 2710. The intuition is that cash has gone down because it was paid from cash, so it must be minus. Or otherwise, if this side is minus and if you don't understand, forget in the exam, then write this side also minus because it is in the other category. So if on this liability that I already explained. Now I go to the next part. 8 is done. 9. At the end of September, DSJ records a depreciation expense of 200 to recognize that the equipment is not new anymore. So this is depreciation. Now, is there any cash transaction or not here? This 200 is a depreciation expense. Okay, first of all, it is an expense, it is already written. So expense means this will be part of profit. So I will have to write here depreciation expense, because this one is expense, wages is expense, cost of goods are expense. So depreciation expense will be here. So no need to write expense, just depreciation is enough. And this one is 200. So I write here 200. Okay. Now, what will happen? Where to adjust this 200? Somewhere here or somewhere here?
So I think assets it will go, right?
Assets will do. Okay. Which assets? There is only one
Equipment.
asset. Yeah, this equipment. Okay. There is only one equipment now. So since this depreciation, well, this should be actually cost. No, it has reduced profit.
Minus.
Minus, yes. I had forgotten to write minus, because all expenses are minus, and this one is an expense, so this one is also minus. And this side also, equipment, this will be minus 200. Okay? And there is no cash transaction in this, only accounting transaction. Now we go for the, let's see, 10. Oh, many more questions are there. Okay, 10. The company also records rent expense for the 3-month period. So this is only 3-month period. Recall that DSJ paid 6-month rent in advance on June 30th. The prepaid rent was, so this 3-month rent is 2,700. So it is an expense. So I will write here simple. This one is the expense rent. So this one is also expense for rent. And it has reduced profit. So it will be minus 2,700. Yeah. No problem here. Now the question is where to adjust this side. Who will tell? Out of these 5, which one will be deducted? Because it is minus, so this side must be minus.
Prepaid rent it will go.
Prepaid rent.
Prepaid rent will be deducted. So minus 2,700. Okay. This we did. Now we come to 11. Okay. What is the question number 11? The interest expense incurred during the 3-month period is 90. Again, it is interest expense. So it is easy to write interest expense. Yeah, because it is expense. So we will simply write here interest expense. That's it. And it is 90. So this one is what? Positive or negative? It will be reduced profit, so it will be negative. And nothing to worry about it, means just clear it. Now, what will happen on the other side? Let's see. Is there something more? Has it been paid or not? The interest expense incurred during the 3 months and 90, which is not paid. So, what will you do if it is not paid? So, what will be the column on the, it has not been paid, and whether it is a liability or asset? If it is to be payable, but it has not been paid.
It will be a liability.
It is a liability. So we will have to write one more item in the liabilities side, and we will have to write interest payable. Yeah, interest payable. That will be part of accounts payable. So, but I just did it. You could put it in accounts payable, but then interest payable gives this better description. And what will happen? This will be positive or negative. It has to be negative, because why will it be negative? Interest is reduced, so this one is negative, so this must be positive, because it is on the same side of the balance sheet. So one is negative, other is positive, other must be positive. Yeah, do you remember that rule?
Yes, sir.
So interest payable, and the logic is that interest is to be payable, so liability has increased, and that's why it will be positive, and this has decreased profit. So we did this.
But if it's both are minus, then
No, both will not be minus because interest is payable is an increase. No, logic is that. Yeah.
okay.
When will it both be minus? If it is cash, then it becomes on the asset side. So this minus and this minus must match. But it is in the same. So one will be positive and the other will be negative. Then only balance sheet will balance.
Okay.
Yeah. Do you remember that rule?
Yes, sir.
That if you forget in the exam, but still remember that, well, if we are entering on the same side, then the opposite signs. If we are entering on both sides, then same sign.
Yes.
So that is the rule of making no mistake in the exam. If you forget the intuition, but intuition is that interest payable has increased because we have to pay, so it is a liability, it must be positive. Okay. Now I come to the next part. The interest incurred. Now what is the okay. To finance its operation? Now this comes financing part. DSJ obtains a 9,000 loan with interest 4% per year. And how did the 90 came? It tells that this 9,000 into 4%, that is for 1 year, and it is for 1 quarter, so 3 by 12, so 90 is interest. Okay. No need to go into detail. 90 is the interest expense that will come. 12. The income tax rate is 25%. And DSD recognizes an income tax expense of 425. So again, this is tax expense. So what we will do, where will we write? Rick, where will I write it?
In expense, we can add a row called tax. Something.
Row where? Here or here?
Under profit, like under profit.
Under profit, yes. So income tax. And it has reduced profit. So it will be minus 425. Yes, it has reduced profit. Now this has to be accounted somewhere. Let's see where. Where will it go? What is the other detail? So it tells us which will be paid in November. So it is not going to be paid now. So what will happen? Where will I write this part, the counterpart? It has to be paid in November means what is happening?
Liabilities tax payable.
Liability is increasing, yeah? So let me insert one more. Insert row, and I will write here tax payable. Yes, income tax payable or tax payable. Okay, and what will happen? This will be for what has happened to the tax payable. It will be positive or negative 425.
Positive.
Positive. And what is the intuition behind that?
The tax that we have to pay has increased. So
Yes. So we still have to pay. So liability has increased. So this will be positive. Liability has increased. Very good. Now the last part, 13. Finally, the three friends realized that at the end of September, the cash balance is only 13,290. Let's see, is this correct? So let me add all these. If I add all these, so this one was 12. And if I add it equal to, let's add all these. So this plus 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 this and enter. So 13,290. That is the cash balance. And that is what it tells. The three friends realized that at the end of September, the cash balance is only 13,290. Means whatever we made the balance sheet, we made it correctly. They realized that they are going to need additional financing to maintain liquidity until the company achieves higher sales and profitability. They negotiate a 3-year bank loan of 15,000. So what is this 15,000? Is this short-term asset or long-term asset or liability? This is a loan. So this loan is a liability because you are taking the loan. This is a long-term liability or short-term liability?
Long term.
Long-term. So we will write on the long-term liability 15,000. So I will have to add, well, there is a one column. Let me insert one more row. And I write here long-term loan. Long-term loan. And well, this 15,000 will be positive or negative here?
Positive because it has to be paid.
It has to be very good. So this one is 15,000. Okay. And then what will happen here? Now
Cash will also increase by 50.
cash will increase. So I will have to write here 15,000 positive or negative?
Positive.
For same
Oh.
sense.
Positive, because this side is positive, so this must be positive. And since cash is increasing, so this must be positive, and we have got this. So now our sum. So balance sheet on this completes our 11, 12, and 13 items. Yeah. And then 30th September has come. So let's create balance sheet. So here, what is the balance sheet on 30th September? This becomes balance sheet on September 30th. Okay. So we will add all these. So what is the short form? Sum of all equal to, where is the sigma? Sum all. Let me add sum from here to here. And enter. Oh, what happened? Some C30.
So you have written sun. You have written sun instead of sum.
Oh, okay, sorry. I have written, yes, sum. Okay, so did we get the, yeah, enter? Yes. So we got this much of cash, and I just need to extend it. Oh, sorry, if I copy it from here to here. Yeah, all are calculated. So this is our balance sheet. Okay, now what I will have to do that I will have to add all these assets part. So equal to sum, and from here this to this, and enter. So 59,290, and now I delete these parts. Okay, and then I add this entire thing. Yeah. So equal to sum within bracket.
Sir, I think you missed the last row, sir. The minus
Yes.
425.
Oh, yes. This 15,000, which last row?
This 42nd row, it should have some sum, sir.
Okay,
like
okay,
minus-
okay. Let me first add it. If it is error, then I must have missed it. Oh, okay. Okay, then just escape. So you are, okay, yeah, I missed this row. Yeah. This tax payable, no? Yes. So it should, I should just make it here. Yeah. Okay. And now I add here sum equal to sum, and within bracket from here to here, and I just add and enter it. So 59,290, and this one is also 59,290. our balance sheet is correct, and we made everything correct. So, any doubts in this balance sheet? Your balance sheet on September 30 is clear.
So
That's how we do
the
that. Yeah. This one is assets, and now you have to classify this separate. This is broad balance sheet. Now you want to separate liabilities and equities. Yeah. So what are the liabilities? So liabilities will be here total. Let me add one more row. Where insert rows, and this becomes total liabilities. Well, short term and long term I can do that too. So let me do this. Insert one more here, and this becomes long-term liability. So this one is current liability. So let me write it here, current liabilities, and I add till here. So this becomes our current liability, and I equal to sum within bracket from here till here. So this becomes our current liability. I make it bold. And long-term liability is already, there is only one item. So I shouldn't add, just let me separate it. So this is our long-term liability. And what is our equity? So let's add this part. So you can do simply equity. So our balance sheet has matched. So what I do, that equal to this minus total liabilities, means this minus this minus this. So, oh, sorry, no, there is problem. What I did, that this sum is different. What happened? That this sum is not this, no?
yes, sir. It is counting
This should be, here it should be, total it should be this part, 59 to 90. 59 to 90. Here it will be 59 to 90, that's for sure. Because we had already done it. And then we separated. So our equity is equal to assets, either that or that, whichever you do, take assets minus current liabilities minus long-term liabilities, and this is our equity. So our equity is 31,275. So what is the net profit? Earlier equity was 30,000 on June 30th, and in this September 30th, it became 31,270. So 1,275 is the profit or return on a capital of 30,000. So you can calculate ROI as well, though not part of here, but I am just separating it. Return on investment is equal to this divided by this and minus 1. This divided by this. So how much? Oh, what did I do? Oh, sorry, equal to, where was that? Sorry. Where did this go? Oh, sorry. Control Z. Yeah. Now, our ROI is equal to this divided by this, and minus 1 I will have to do, but not necessarily. We can do like this, and this minus 1. So 4.25%. 0.425 means 4.25% over a quarter. So annual it will be, this is quarterly, and equal to, if we want annual, this one was quarterly return on investment, and annual return on investment is equal to this times 4. What we can do, that we can do it
0.17.
yeah, Yes, 0.17. So this times 4 and it becomes, I made a mistake. What is this? Okay, sorry. Equal to this times. So times is here, 4. And so 0.17 or 17%, which is not a bad return. This is pretty good return. So that way your balance sheet gives a lot of information. Now my question to you all is, did you find it interesting?
Yes, sir.
Or,
Yeah.
Interesting, or was it boring?
Interesting.
Interesting, yes. And do you feel you learned something?
Yes, sir.
Okay, very good.
Definitely.
So you learned as well as enjoyed. And that is the best part of learning, that you learn and enjoy. So now, if these kinds of questions are given to you, I hope you can make the balance sheet on your own.
Yes, sir.
Okay, very good.
Sir,
Now,
one doubt, sir. Is the profit expenses also included in every balance sheet? If yes, then what is the difference, sir, between
what?
the?
Oh,
We have included the profits and the expenses
no,
here.
no. We have not included profit and expenses. We have not calculated profit as such, because in this, I didn't calculate profit. This, you see, it is blank. Okay. This one is, actually, this one was stockholders' equity. Sorry, Control X. It should be here. Control. This one is stockholder. So actually, profit is blank. I have not calculated profit, but profit will be 1275. Net profit will be 3175 minus 30,000. So if you want to calculate profit, so profit is equal to, you can calculate either this minus this directly for short. Otherwise, once I entered, okay. So 1275 is the profit. Now, let's calculate this part, because this part is profit, no? Sales revenue and these are the expenses. So let me delete this part.
Sir, but when we were balancing the total assets and total liabilities, we were including a part of the profit also in the liabilities, no, sir?
No, I was not including this value.
When you did the sum, even
Okay, let me do it again some. So let me remove this profit. Okay. So you are to calculate balance sheet. Okay. So balance sheet is equal to total liabilities plus stockholders' equity. Okay. So stockholders, so let's calculate balance sheet again this way, 3 way. So this one is equal to, these are current liabilities. So I add this, then plus long-term liabilities. So these are total liabilities, and plus stockholders' equities. And this one give you the balance 59,290 and 59,290.
okay.
Yeah. So that's how, because total assets is equal to total liabilities plus stockholders' equity. And these are details. They are not parts. So you will add only these three to get a balance sheet.
Yes, sir.
Okay. Is it clear?
Yes, sir.
Okay. Shashwat, any doubts?
No, sir.
Rick, is it clear to you now? Can you make balance sheet?
Yeah. I'll reattempt the questions once from our end, like from my end.
Okay, very good. So you can answer it. So what is the time now? It is already 11:21. So should I make income statement, or you want me to solve the questions that your class was given, to you? You want to discuss that first, because you already told me?
Yeah, I'm not sure how much time you guys have. Like,
That will take some good amount of time, at least half an hour, because it has 8 or 9 questions. But it is interesting. You will, okay, let's do that.
Sir, one doubt before that, sir. So we have now
Yeah.
seen how we get the balance sheet. So whatever is below the profit part, that is the profit and loss statement, right?
Yes. So if you want to calculate profit and loss, so let's calculate this one. So let me remove this part. Okay, equal to, let the balance sheet be there. I am calculating profit and loss, or P, profit, yeah? P, income, or P and L, okay? So what I will do, equal to, this part is sales revenue. That is what I wanted to calculate, income statement. Okay, let me make profit and loss statement. Let me do this below this. So I will use only this part because profit is here. So all these will be part of income statement. Okay,
Yes.
so let's do that. It is also very interesting. So now I am making income statement. Okay, what happened? Why I couldn't write? What is the problem? Oh, sorry, it is here. Escape. Yeah, now I will write here income statement. Income statement, or also called profit and loss of P and L statement. Okay, both are the same name. So first, the part of income is sales revenue, and that is 32,000. Yeah. Then we have cost of goods sold. So cost, okay, so what I do, minus cost of goods sold, and this becomes minus this part, 21,000. Okay, I enter here. So equal to, well, this one was minus, so I will have to write it minus 21,000. Okay, now I add it. Well, I could have subtracted also, but okay, equal to this plus this. Okay, so 11,000 is the gross profit. This one is called gross profit. Okay, what your different name? You can write it different name as well. Gross, or it is not gross, it is gross profit. Okay, this is the first item. Then you deduct the operating expenses. So this wages are operating expenses we are paying. So minus, well, let me write wages only, and I will put here minus. So wages are minus 3,600. Then what is the other? What that is? Wages. Okay. Then what is the next part? Utilities. Utilities. And how much is that? Utilities expense is 2,700. So minus 2,700, minus 2,700. And then after utilities, depreciation, I leave it here. And I do this equal to this plus, because I already wrote minus, so I have to do plus, and plus this and enter. This one is called operating profit. Okay. Well, it is not completely operating profit, but this one is income EBITDA. EBITDA means, no, I didn't write it correctly. EBITDA means earning before interest, taxes, depreciation, and amortization. So here we have only depreciation. We don't have amortization. Amortization is a concept of goodwill, such as brand value. So even though Coca-Cola is not really very, what I would say, much, it doesn't have much depreciation, but it has high appreciation because amortization, because it has big brand. So investors think that this is a safe company because its brand name is very high. And that's why, even though their revenue is low, but stock prices are high because of brand name. So that is called goodwill. And that goodwill, when depreciated, it becomes amortization. And depreciation, you purchase this capital and it becomes older, and that is depreciation. So the definition of depreciation is consumption of fixed capital. So this became EBITDA. Now
Can you explain the amortization once again, sir?
Hmm?
The amortization part, can you explain that again?
Amortization part is the depreciation of goodwill. So what do you mean by depreciation of goodwill? When you buy a company, it has good name, okay? And when it has good name, this company becomes older, then they pay more price for them. They said that this brand name will last for 10 years. Coca-Cola will be known as top soft drink for next 10 years. Someone buys Coca-Cola at its current price. They know that its revenue is not that much to support so high price. So what they will do, that well, there may be some better drink that will replace Coca-Cola, and its brand value will no longer remain that valuable. So they have paid the extra price, and that price is known as goodwill price. So they will deduct it for 10 years. So if they paid 100 crores in 1 year, if there is linear deduction, the amortization will be 10 crores. So amortization is similar to depreciation, but the difference is that depreciation is physical. Like we have this equipment. Here, this depreciation was for equipment which was physical. But in amortization, the depreciation is the good is not physical, just brand name. Means you cannot touch it. It is just the name, and it is called goodwill. So there is amortization of goodwill, and depreciation is of physical capital. But both are very much similar in terms of how they are depreciated. So this becomes EBITDA. Is it clear?
Yes, sir. Yes, sir.
Okay, now next item is EBIT. So I will have to deduct depreciation, and depreciation was just 200. Yeah. So minus 200, and I sum equal to this plus this. So this became 4,500. This one is called EBIT, earning before interest and taxes. Okay, and these are very important concepts actually. So this one is bold. This one is also bold. And then I deduct interest because then interest comes first. So interest is 90. So minus 90. And this one is equal to this plus this. And this one is your EBT, earning before taxes. Okay. Then we deduct taxes. So EBT will also be bold because it is a concept, important concept. And this taxes will be, how much were taxes? 425. So 425 is the taxes. So this one is also minus, and we have equal to this plus this. So 3985. So 39, this one is what? Net income. So this is net income. Net income is 3,985. Did we missed something? And this 2710 was utilities, no? Oh, no. Did we include all the items? Because net income should be only 1275, no? So 32,000, 21,000. Then What is this 3600? Cost of goods sold, okay. Then 2710 is, oh, this I missed. 2710. This one is not 27. Utilities is 2710. So this one is 2710. Okay. So 2710. And now after 2710, 200 is depreciation. And then
the rent.
the rent was left. So it should be here. The rent should be here. Insert rows because it is part of operating. So rent should be here. And this should be 2700. And now this equation will be,
So that should be minus.
oh, sorry, yeah, it
27.
should be minus. Yeah, yes, very good. It should be minus. And so I will have to add plus this. Let me see. Is that okay? Yeah, 1990, 17, yeah, 1275 now. So this one is the net income, which is called profit. And this is your income statement. So once you have learned how to make balance sheet, you can make income statement very easily with profit part. You can write it here, income part as well. It's not necessarily profit. You can write it this as instead of profit. You can write it also as income. Because revenue is an income, sales revenue. So you can write it. It depends upon what you choose to write or what the examiner asks. It is up to, oh, sorry. I can say income. I will put it here to write this. So you learned income statement.
Sir,
Yeah.
the dividends that companies declare, would that be
That
on the
will
net
be part
income?
of here, net income. Then after this, there will be dividends, and say they declare dividends of how much? 500. And so this will be minus, this will reduce cash flow, and then this will be retained income. So I will have this one equal to this plus this, and you get retained income. This is added to the equity. This retained income will add the value of equity. So then equity will not remain 31,000, but this one will be 30,775 only. So this becomes part of equity for next balance. So this then equity value will become here this 30,000 plus 30,000 means 30,775. That will become the equity. If we have this dividend as well.
Okay.
Okay, very clear.
Yes, sir.
Now cash flow statement. Let's learn that as well, and it will take the same time or maybe even less. So let's make the cash flow statement. Okay. So cash flow statement means only this column, cash column, only this column. Okay. Now, what had happened here? So we don't know the names. Well, cash is beginning cash. So beginning cash is 33,600. So cash flow statement starts with beginning cash. And it is of, well, it is of three kinds, so I had said. So cash flow from operations. One is this part. Cash flow from operations. Then maybe I will, then another part will be
Financial.
cash flow from investing activities, investing. And then cash flow from financing, not cash flow, because it is flow for the entire period. So it will be cash flow either two words, or normally people write cash flow only one word. Cash it doesn't look good. Let me write it cash flow from investing. And the third one will be cash flow from financing. So cash flow from financing. Okay. In this period, there have been any, we will see that. Yes, there has been. We had taken the long-term loan, and that long-term loan was long-term loan of 15,000. This we had taken, no, in the last, this 15,000. So I write it here, long-term loan. Where did I write it? What did I write here? Cash I wrote, and long-term loan here I have written, yeah. So this one is financing because it is long-term loan. So long-term loan, and here I would write cash amount. So cash, let me write it here. Values, in fact. So values. So cash flow from operation. So here it will become 15,000. I write here 15,000. Okay. Now cash flow from investing. Which part has been investing? So investing part has been, have we done any investment? Long-term loan, interest, these are operations. All these are operations. So there has been no investing from cash flow. Long-term loan is the one for financing. And then we don't have, okay, let's start from operations and then we will go. So this first part, how much is the first part? Which one is the first part of cash flow? The first part is minus 4,000, and this one is equipment, or this is investing, because we purchased equipment, and so this one is investing, short term. So this 4,000 is investing, so equipment, and this becomes 4,000, and it has gone down, so it is minus 4,000, and this one is positive because we have taken it. And now rest will be from operations. So let's see which one is the first thing after investing. This is the another cash flow, and 3,000 is the cash from sales. Means this cash came from what? This 3,000 came from what? 3. Which one was 3? Prepaid rent equipment.
Sir,
Yeah.
ski inventory was minus 21,000, but they received only 3,000 in cash for that.
Okay. So sale of it is operating. So sale of a scheme. This 3,000 came from sale of a scheme. Okay. So I will write it here. It is from operations. So ski sales. Ski sales. And this one is 3,000. And this one is positive. Then what is the next one? How did this come? 1,500 came from deposit. This one. It was in a part of liability, prepaid goods deliverable. So this came from goods deliverable, specials, goods deliverable or prepaid goods. This one was 1,500, no? This came from there. And this 11,500 was from sales revenue. So again, it was sale of this side, sales revenue. Okay, so it came from, actually it was in the part of accounts receivable, and then it came. So let me write it in detail same way, accounts receivable. This came from accounts receivable of what? Accounts receivable, okay. This accounts receivable, though all these be part of sales, gross sales. Why am I writing it in detail? Okay, 11,500. Well, I am writing it in detail, but the sum will be 34,000. That is what it has to be. So 34,000 is from gross sales revenue. Okay, but let's write it in detail. And then minus 26,000 has gone for what? That had gone for accounts payable, minus 26,000. So minus 26,000 was from accounts payable. I had to tell it accounts payable. Did I write anything or no? Did I write it only accounts payable? This 26,000 accounts payable. It was in liability part, no? 26,000 is a part of accounts payable. I have written against accounts payable 26,000. So minus 26,000 is accounts payable. So this one is minus 26,000. Okay. Then this minus 36,000 is wages that I remember. So wages minus 3,600. And then we have minus 2710 is utilities, no? So 2710 is utility. So utilities minus 2710. And then what do we have? Minus 200 is prepaid rent. It is prepaid, no, it was depreciation, no, minus 200.
Yes.
But this is not cash flow. Oh, this is, oh, sorry. 2710 and then there is none because there is nothing in cash flow, no? So that's it.
So the 15,000 is there.
Huh?
15,000 is there.
Yeah, 15,000 I already wrote, no, here in investing. Yeah, cash flow from investing, long-term loan, no, from financing, sorry. Cash
Yes.
flow from financing is 15,000 positive. This 4,000 is from investing, so let's add these. So cash flow from operations. So this is the sum. So I should have written actually, this part should be cut and this should be written, okay, control V. Cash flow from operations. And let's equal to sum within bracket from here to here, and this one I enter. So from operations, the company was in net loser of cash, minus 16,310. Then again from equipment also it was loser of cash. And then I come here with 15,000, so total of sum. So net cash flow, total cash flow, sorry, total cash flow is sum of all these total cash flow. So this one is equal to cash flow from operations plus cash flow from investing and plus cash flow from financing. Oh, how will I write this? Okay, let me write this here. Sorry, no. Yes. What is that mean? Let me correct. Sorry. This one was 15,000, but then okay, let me add it here so that total cash flow, not here, control X and control V. So equal to this plus this and plus this. So this one is minus 5310 is the cash flow during this period. And what was the beginning value? Beginning cash. Beginning cash was this part, this one, 33,600, no? So beginning cash is equal to this part. This was it to begin with. So copy and I will paste it here. So beginning cash is this part and the ending cash. Ending cash will be sum of these two equal to this plus this and enter. So this is our ending cash. That is what the bank means the company should be having as cash. This must match here, part of balance sheet. So our ending cash is 28,290. Yeah, this part. So this is the part of balance sheet. So our cash flow statement ending balance matched, and since our balance sheet has already matched, so there is no error in accounting. And that's how we make these three statements. So most difficult is building the balance sheet. Once you have built the balance sheet, then your income statement is only this part, profit part. Just go at the bottom and take all the value from here and classify them like this. Means what is gross profit? Okay, gross profit, then EBITDA, EBIT, then EBT, net income, and retained income. That is what you have to do. So, but the information is
Yogi, we are not stuck, no?
Oh, okay. Yeah, I thought I was having
No.
problem.
because as a as an equity analyst, you might not
Sir,
be having.
you were lost for a minute, sir.
Hmm?
You were lost for a minute, sir.
Oh, I was lost for a minute. Okay, am I back now?
Yes, sir.
Sorry. Am I back? Yeah, I am back now. Okay, maybe the internet was a problem for 1 minute. So what did you miss,
When you started
Yogi?
summarizing the whole thing.
Okay, so let me summarize once again. If you missed it, let me summarize once again. So I had said that balance sheet building is the most difficult part, and once you have built that, then for income statement, all you need to do is have this profit or income part and go write all these columns. But you have to classify them, that whether what is gross profit, what is EBITDA, what is EBIT, what is EBT, what is net income, and what is retained income. So that is what the trick is about making income statement. Means you will have all this information at one place, but you need to classify them according to these different accounting concepts. And these concepts are very important uh, because if it is EBT and net income a big difference, then the country is not considered good and many investors will not go there. And that is the case with India. In India, taxes are very high, and that's why we don't have foreign investment much. The foreign investment comes only in the form of institutional investments and having partnership with Mukesh Ambani and Adani and Tata, which are safe companies. Otherwise, no, because taxes are very high here. So for income statement, you have to classify as gross profit. EBITDA is operating profit. This one is also called, well, operating profit is actually here, EBIT. This becomes your operating profit. EBIT is also called operating profit. But not many people pay attention to operating profit. They just say that, okay, you have written EBIT, you have written EBITDA, you have written EBT. The investors and the analysts are more interested in these kinds of values because it is very clear. So once income statement has been built, do you need more explanation, Yogi, or it's fine for now?
Yes, sir, this is fine, sir.
It's fine, okay. Then you go for cash flow statement. And cash flow statement is only one row. That is the easiest one. You have these rows and you know their classification that, well, this came from here. Its counterpart is here, means it was equipment. Then this is where is this cash flow? Its counterpart is where? This 3,000, where is the another 3,000? We have here this included. So this has become cash from sales because its counterpart is actually here because sum of these two is here, means sales revenue, part of sales revenue. Okay. And then, so you have to classify this entire row into three categories: from operations, from investing, and from financing. So equity contribution and long-term loans are called financing. Investment in plant, property, equipment, mergers and acquisitions are called investing. So any cash spent on these plant, property, equipment, mergers and acquisitions, or you said purchase of shares of other companies, all these are part of cash flow from investing. And then the rest is cash flow from operations. So the cash flow statement just gives the classification of cash flow according to three activities, and your cash flow statement is almost ready. What you do that you add the previous beginning cash and reach the ending cash. So whatever this total cash flow has happened, add your previous cash balance, which was the beginning cash, and then you get ending cash, the sum of these two. So that's how we build cash flow statement, income statement, and balance sheet. Okay. So it is already 11:53. How long do you want to study more? Or let's stop here, and otherwise this Rick had the question. We can solve some of them.
No, sir, we can take it later with. I'll also have to run for a different group task at 12 now. So
Okay. So we will take it later. So I stop here, and then we will. So I stop sharing, and then we will meet again tomorrow. So what time do you want to meet?
So I'll have to check. Like it's so dynamic. That's the issue. Like
Okay, so you can give me before, I mean 7, 8, 9 anytime, because this Shashwat is also a late night bird. Means he remains awake till late night. So it is not a problem for him if you are late. And same with Rick. That Rick is too busy, so I can still start at 9:30 tomorrow as well. So
Sure.
you give me the time, three of you meet and decide yourself on this. I think Shashwat, are you available anytime? No, you don't have
Yes,
any.
sir. Yes, sir.
Huh?
After 7, after 6, I'm available anytime in the evening.
Okay, anytime after 6, 7.
Yeah.
Okay, okay. So both these you both, whatever time you decide, Shashwat is available. Okay, so Shashwat,
Yes, sir.
did you find today's class interesting?
Yes, sir, of course. It was kind of a revision type because I studied some basics of this in college.
Okay,
Yeah, so it was interesting.
it was interesting. Okay, and did your professors teach the same manner I taught, or
No,
did
no,
they teach?
they,
or
they,
no?
taught, they taught us in a very complicated manner. So it was very difficult to understand at that time. So it's clear. It's very clear right now.
Now it is very clear to you. Yeah,
Yeah.
so that is my style of teaching, that you remain attentive, you pay attention to it, means you don't get distracted. If I am teaching, then you don't get distracted, and your interest remains focused on the subject matter forever.
Yes, sir.
So that's how, and you learn as well. You said that now it is very clear, you learned it.
Yeah.
And so, okay, so all classes will be like this. Yogi is my former student, and he was so impressed that he made a special request to me that I must teach him for CFA, otherwise he won't take it. He said that if I teach, I must teach. So he took my permission first, that okay, I will teach, and then he filled the form. So, so Yogi, and he stood fourth in the Madras School of Economics test. So he had liked economics so much. So when we will go for economics, well, all classes will be interesting like this. It is not that any of the class will be no interest, will not be interesting. Okay, so we will meet tomorrow, and I end the discussion.
Yes.
Good night to you all.
Yes, so tomorrow also will be continuation of
Yeah.
financial statement analysis.
Yes, financial. Yes.
Okay,
But you don't have the book, no? Yeah, but I will continue what he has sent me the questions.
Yes, sir.
That I will continue.
In case
When
you
you get
have
the link-
the books from your time, sir, like we can do that also, sir.
Yes, when we get the CFA book, then we will go each
Oh,
chapter wise.
Okay,
Yeah.
sir. Okay. Sir.
But until this, this will be part of CFA material. It's not that it is away. It is part of CFA material.
Okay, sir. Okay.
Okay. Okay. So good night. See you tomorrow.
Thank you, sir. Good night.
Thank you, sir.
Welcome. Bye.